So folks, in this video, I'm going to be telling you about my top 4 indicators for usage in 2020. I'm also going to be giving you a wonderful explanation as to why I use them the way that I use them, how they work, as well as how to set them up. Personally, over the course of my trading journey, I've adjusted my settings many times. If you were to see some of my original setup, you'd be shocked to see how different it was. The settings and the indicators that I've chosen to use are the ones that I believe work best with my personal trading style and my personal goals. As you evolve as a trader, you may find that you want to adjust the settings. That's up to you, my friend. For those of you who are new here, the platform that I'm using is called ThinkorSwim. You can get that for free on TD Ameritrade's website. It's not perfect, but it is one of my favorite platforms. In fact, in this world, there is only one thing, just one thing that is perfect, and that is the act of going and hitting that ravishing like button. Okay, so to start, if I was stuck in the middle of the desert and only had one indicator to use, I guess I'd have other problems if I was stuck in the desert, but let's just say that the only way out was to trade my way out. Well, the first indicator, the most important indicator that I pick is our blue price strength SMA line. Why is that? Well, it's because this is what allows us to measure our price strength, right? If we're above the blue SMA line, we're in positive price strength territory. If we're below it, we're in negative price strength territory. It's pretty easy to understand, but the reason that this is relevant is because if we can find a confirmation of positive price strength, that's what a confirmation means, confirming that we have positive price strength. That means that we can ride that until we have boom, 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 negative price strength. Pretty intuitive, right? And with that goal in mind, we have concrete entry and exit points. But it's also more than that, because if you expand this to a different time span, you get different results, right? So if you're looking at the context of this last 10-day period, during this period, we have clean positive price strength, right? And then here we have choppy price strength. But during the day chart, you can see different areas of price strength. So it depends on the overall context, and understanding price strength means that you can take all of the different pictures into your larger, broader understanding of what's actually going on. If that could be the only indicator that I'd have the option of using, then that would be what I'd focus on. But another thing to keep in mind with something like this is that a lot of people say, oh, indicators, they don't tell you anything that you can't see by just looking at the price action. However, it's a lot easier to look at this blue price strength SMA line and see whether or not we're in a positive or negative territory, as compared to if we just went and turned it off. Let's just turn that one off for a second. Okay, so can you tell if we're in positive or negative price strength? You could say, oh, well, this went down here, this went down. But it's not as easy and clean cut to see the overall picture if you don't have the indicator set up. So that's just my 2 cents on that. You don't have to have it set up if you don't want to. But, it's really up to the individual. And it's back. Okay, and then you could see positive price strength, blah, blah, blah. And being in a positive price strength territory, that's an elevating factor, by the nature of that you're in positive price strength. Okay, so the second indicator that I'd trade my way out of the desert with is the red directional SMA line. Folks, this is what you use to gauge your direction. How do you know whether you're in an upward or a downward direction? Well, pretty intuitive. If you're trading above the red directional SMA line, you're in an upward direction. If you're trading below it, you're in a downward direction. And if you just attempted to turn your upward direction into a downward direction and then rejected it, that's called a rejection of a downward direction, which is a elevating factor. Hope I didn't lose anybody there, but it's actually pretty intuitive. If you actually look at this for a longer term context, all of these indicators have longer term context, by the way. You can't just take it all in a vacuum on the 1 minute, 1 day chart. You need to look at everything, right? So if you're looking at this in terms of the 5 day, 15 minutes, all of a sudden we're like, okay, well, look at the context. We had uncertain price direction. And then all of a sudden it got quite certain, right? It gained intense price strength and it broke out above previous price strength and then continued running up. And as the directional red SMA line goes up, that's a sign that the overall direction is now more profitable. It's moving faster upward. So the barrier to being considered upward direction is now higher. This is also very important for stocks like Tesla, right? People were playing Tesla. They love Tesla. I love Tesla, but it's quite extended. But if you're looking at this from like a 180-day perspective, you could say, okay, well, we had uncertain price direction, and then boom, 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 we held upward direction. But let's just go ahead and look at it from the 20-hour perspective. Okay, so we're getting close to changing direction, and then we're still on the up and up. So in terms of actual direction, in terms of a swing trade, we haven't really changed directions yet, but we have negative price strength. It's been selling off, and that's something you can consider with the directional SMA line. It's something that's very useful. Let's go back to Schwix. Okay, so the next indicator that I'm going to be talking about, I should talk about volume. It's not really an indicator, but I should talk about volume when it comes to upward sentiment volume. When you have a stock, or in Schwix's case an ETN, that is going up, and you have volume that's going up with it, that means that you have upward sentiment volume. The same thing is true in reverse. If you have downward sloping volume and the volume is going up, that means you have downward sentiment volume. And it's important to know that, because then as the day trades on, all of a sudden you're in the situation where you see volume increasing, but you know that it's already upward biased. So that's an elevating factor. A lot of people don't look at volume. They just say, oh, well, is this enough shares to trade off of? And then if it is, then they're like, okay, well, I don't have to think about it. But in terms of actually understanding what's moving the price action, in terms of actually understanding why something's going up or down, you need to look at the volume. You need to be familiar with volume, and you need to be familiar with analyzing that for elevating and deprecating factors. Okay, so we covered the two SMA lines, our blue price strength SMA line and our red directional SMA line. Okay, next, the RSI, the relative strength index. Or as some people say, the really sly indicator. Ha ha, get it? Because RSI, ha ha, initials, never mind. So what this tells you is whether or not something is oversold or overbought. Now, something that's oversold doesn't mean that it's a good deal. It just means that in terms of this one indicator, in terms of this previous price action, that it's a good deal. And something being overbought doesn't mean that it's necessarily a bad deal. It just means that it's more likely to be a bad deal. Let's look at a different piece of price action. Not Tesla, we'll try AMD. Okay, so if we look at this from a 20-day, 1-hour perspective, we have a comeback pattern of going from overbought to oversold to overbought to oversold to overbought. Is this overbought? Yeah. To overbought again, and then to oversold. So we have a light form of the comeback pattern where you could simply buy in at oversold, and if you had done that every single time, you could have just sold out at overbought and made a profit. So how does this indicator actually factor in when it comes to all of the other indicators? Well, if you're looking at this point here, like, okay, well, we have negative price strength. We have positive price direction. And we're oversold. So you know that, hey, maybe in the past, it recovered from oversold to overbought. We didn't see this on that chart, but if you look at the past, this is what had happened. And then all of a sudden, you could say, okay, well, we know that being oversold is a elevating factor. We know that being in an upward direction is a elevating factor. So now we just need a clean price strength confirmation. We want our price strength confirmation over our blue SMA line. And then we ride up, we have after hours and pre-market trading. And then here we have some false confirmations. But it doesn't really matter, because if you buy into price strength, that's fine. You could sell out if you have price weakness at validation below the blue SMA line. But buying in at confirmation can allow you to ride up, and then sell out at validation. And it really depends on how you're practicing this, right? Because it's more of an art form. How is it that you're actually playing this position? How stringent are you being with this type of position? And in terms of stringency, it's very important to understand that, hey, at this point, look, at market close, we're overbought. Look how overextended we are. That's insane. And we have this upward sentiment. So all of a sudden, we're at this point where it's like, okay, well, wait a second. If it cracks below our blue price strength SMA line, we're in a negative direction, and we have these huge deprecating factors of being overbought. So it's like, well, hey, maybe I should sell out. So it really is, at the end of the day, it's a huge balancing act of elevating and deprecating factors. Another thing that I would like to show you in terms of ZDocu. Now, let me find a better one, just to show you a good overreaction play. What was a good one from a few weeks ago? CDE? No. BBY was a great one. I have a terrible addiction to talking about my good callouts. But anyway, so this is another example of a stock that has a previous pattern of being not just an overreaction play. That means having a bad piece of news come out, dropping it massively, and then completely recovering, or at least partially recovering, because every reaction in the stock market is an overreaction. But it also has this pattern of going from oversold to overbought again and again, right? And if you had done that, if you had bought in and oversold and just held out until overbought each and every single time, you would have made a profit. But look at combining all of the indicators together. Look at how that works, right? Oversold to overbought. At this point, we have, okay, well, we're oversold, right? And then we're overbought. And then all of a sudden, boom, 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 after being in an upward direction, at this point, we're oversold again. Now, if you look at this for context, look at what's happening here. We have multiple elevating factors going on. We have, all of a sudden, we have this breakdown, deprecating factor, breakdown of price strength and price direction. And then we test a downward direction. But look what happens. It rejects it, and we have a clean confirmation upwards likewise allowing us to write not just from oversold to overbought, right? Not just from oversold to overbought, but also from confirmation to validation. So it's very important for you to understand exactly how to balance your elevating and your deprecating factors. And the same thing happens here, right? It gets beat down on bad news and then it goes up. So in any case, this is sort of a quick overview of how all these indicators come together to make you a better trader. But using them in different contexts can make it very helpful to understand exactly the context of price strength, the context of price direction, and sort of the context of where you are in terms of oversold or overbought long term. Okay, so at this point, we're going to show you how to set up each indicator from scratch. So we're going to go from studies to add study. Well, no. Edit studies. And then we're going to go to simple moving average. We're going to add 2 of these. Okay, and now we just have to edit them. So let's edit this one first. This is going to be our red directional SMA line. I'm going to set that to 180. And then we're going to set this to red, because what is a red directional SMA line if it's not red? Am I right or am I wrong? I'm right. Okay, RSI. And then we're going to add the RSI. And then we're going to add the RSI. RSI is set to default, pretty simple. And we're going to add the MACD. You may notice that I didn't talk about the MACD. And the reason is because it's not one of my top indicators. It's just something that I have there for adding a little bit extra edge. I'll talk a little bit more about that later, but I have a ton of videos on it. I just don't want to confuse people with all these different indicators. So in terms of these, I think these are all correct. I think the only one that you need to change is the 180 to make it red. In terms of the blue price strength SMA line, yeah, it's blue, and we set it to 9. I don't know if I set it to default at 9, but it's at 9, so if your number is something different, just switch it to 9. Okay, apply. So here we have all of our indicators. We have our blue price strength indicator. We have our red directional strength indicator. We have our volume. We have our RSI, the relative strength index, that tells us whether or not something's oversold or overbought. And then we have our MACD. And the MACD is really just useful for gauging price strength in a different way. It's very similar to the blue price strength SMA line, and that when you're over it, you're going to be more in the green category, and when you're under it, you're going to be more in the red category. But there are some more uses to that. I don't want to get too much more into it. I don't really see the MACD as that valuable to your average trader. It's just for folks who do want that extra edge. And you can learn more about that by searching ZipTrader MACD or going into my in-depth analysis within ZipTrader U, but it's up to the individual. Anyways, folks, I do hope that this video lesson on setting up your indicators, I'll leave the specifications open, on setting up your indicators was helpful for you. If you have any questions whatsoever, feel free to reach out to me in the comment section below. You can tweet me at ZipCharlie. You can join our free ZipTrader Circle Facebook group. Anyways, have a great day. Make sure to hit that ravishing like button, and I'll see you in the next video.